Hey friends, it is Lori Hiscock at Ruoff Mortgage. I am doing my weekly paperwork right now, and in there is my 1098 for my mortgage interest and taxes. You are likely getting your document right about now too, so let me take a minute to explain to you what that document is and what you might do with it. To start off, let's go with a little basic overview of income taxes and how they are filed. When you file your taxes, there are typically 1 or 2 pages, depending on the year, where you put the key things related to your income and taxes. You put what your gross income was, how much was already held out from your paycheck, what your deductions are, and then you determine through that whether you owe more money or whether you're going to get a refund. Depending on your life situation, you may have some schedules as well. You may have a Schedule A, B, C, or E. A Schedule A, there's others too, but those are the main ones. Schedule A is your itemized deductions. B is if you have interest from dividends or bank accounts. C is if you own a small business. And E is if you have a rental, partnership, S-Corp, that kind of stuff. This document comes into play with your Schedule A. That is your itemized deductions. As a U.S. citizen, you are entitled to certain standard deductions. You can take a certain dollar amount that the government says off of your income before your taxes are calculated. But you can also itemize your deductions to see if certain things add up to more than the standard deduction. The things that can be included are things like interest paid on your mortgage. Ding, 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 that document. Your property taxes, I believe state taxes you paid the previous year, charitable giving. There's a couple other things that can all add up to maybe be a larger number than the standard deduction and then make your taxes less because you can write off more. Here's where it kind of changes. In the past, we always said, buy a house, it's a great thing, and the interest is a write-off. True, all still true. But 2018, I think it was 2018, they changed the standard deduction. They raised it a lot. And it made it so that for a lot of people, the itemized deduction, adding all that stuff together, is often now still less than just the standard deduction that everybody gets. Not for everyone, but for a lot of people it is. The standard deduction now is pretty good. I think for an individual, and you should double check this with Google or your tax person or whatever, but I think for an individual it's $12,400 and for a couple it's $24,800. So for a lot of us, those itemized things, our interest, our taxes, all of that do not add up to more than just the standard deduction. All to say, you should still use this form and check. You should give it to your accountant, type it into your TurboTax, whatever, and see, because it might be that your itemized deductions are higher than the standard, and it might not. Either way, you want to know. So that's what you do with this form. You use it to check, and if it says standard deduction is the right one for you, okay. If it says itemized is right for you, okay. Either may be the answer, and don't be surprised by it. But use the form, find out. I'm gonna do the same thing, and then we'll just pay our taxes and keep going. All right, if you have any questions for me on mortgages, on real estate, on any of this kind of stuff, I'm always here to help you. Just call, text, or email. Take care.